Good morning. It's June the 14th, 2016. Time to kick off another trading day. Tomorrow's FOMC announcement, needless to say, is being awaited with bated breath. Nobody expects the Fed to change their policy. No interest rate increases expected. No QE4. The language will be poured over to see how aggressive or how dovish or hawkish the Fed actually is. So tomorrow's the full mulligan. You got the announcement. You've got the rate spot chart, the dot chart that they call it, and then you have a press conference at 2:30. And the press conference probably has more potential to move the markets than the actual announcement itself, where interest rates are expected to be unchanged. The market rallied last night in continuation of yesterday's buying strength and strong close, given the weakness in equities around the globe. The overnight news actually found news out of Europe a little bit better than forecast. Japan revised their industrial production up. European employment was up slightly. European industrial production was up slightly. So only China's market was up around the globe. Rest of the markets were down. My guess, crude oil's off a little bit, so I think today's focus is going to be indirectly crude oil, but the direction of the ES. And then today's news, retail sales plus 0.3 can come in lower than forecast. Ex-auto plus 0.4 could come in lower than forecast. Import prices, no one will pay any attention to, up 0.8 due to the increased cost of crude oil. Export prices plus 0.2. Better get on the phones and export all you can, folks. And business inventories up 0.2. That one could come in higher than forecast. So the focus will be retail sales ex autos of 0.4. If these two numbers come in as forecast, that's a negative for financials, that's a positive for equities. It also will lend credence to any Fed comments or commentary tomorrow that the economy is getting better and we can raise interest rates when the data permits. So I believe we're probably, the high is probably in right now. If the E-mini doesn't fall out of bed. If the E-mini falls out of bed, we can trade higher. I like the long side first to retest the basically the 4 to 7 area. I would like to get a short on at 7, but this 4 to 8 areas where sell 1 will be. Number 2 will be 11 to 15. On the buy side, would like to buy against 28 if possible, but the first buy will be the buck to 28. Second buy will be 21 to 25. Market is strong. Weakness in equities. Just really, I mean, everywhere you turn, the chaos is increasing. Stability is decreasing, and markets don't like that. They like stability. They like things the way they are because you can play them if the way they are, just the way you've played them previously. People don't like change. People don't like being out on a limb all alone by themselves with contrary opinions. People would rather belong to the group with good credentials and in good standing and be wrong than to actually act and acknowledge the truth. And we find that in so much of what we face today. Terrorism is one example of that. I mean, there is no doubt that the violent strains of Islam are behind terrorism, and that's not going to change. Okay, first resistance is 24 to 28. Sell 1 will be 31 to 03. Sell 2, 7 to 11. On the buy side, we had the breakout, so 8 to 12 be number 1 support. 1 to 5, buy 1. 25 to 29, buy 2. Gold was on hold last night, and normally would be on hold today too, and tomorrow, awaiting pronouncement by the Fed. What will the Fed do to us this time? And my guess is nothing. We'll have the same speech that Yellen has given over the last month, that it's appropriate to raise interest rates at some time. We'll raise interest rates when the data permits. Okay, we had an 80-82 buy last night. Still looks good. 75-77, buy 2. I think we're headed higher. Resistance is at 90, so 90-92, sell 1. 95-97. I think we're going above $1,300. Not too interested in the short side of the market, but can trade it with setups. Okay, all 3 polls that have been taken over the weekend, the last couple of days, and bear in mind this is scientific sampling, have shown that the votes or the polls more people favor an exit from the European Union than favor staying with them. And if that is the case, the euro will sell, as will the pound. The pound will be hurt more at first as the readjustments are made. Of course, it'll be phased out over a long period of time, but right now, every time we turn around, Draghi tries to talk down the euro. Why? Because they need to export outside of the EU to help turn their economies around. So 12.50, buy 1, 12.25, buy 2. On the sell side, the spill from London came from 85. We're at 63, so 75 to 85, sell 1. 95 to 05, sell 2. And my guess is we'll probably have a little bit of consolidation if they can't take out 12.50 on the first break. Okay, crude is trying to sell. I think we're headed for 47. Obviously, 47.75 to 48 is current support. That's buy 1. Then 47 and a quarter, 47 even, buy 2. The breakout came from 47. On the sell side, 48.50, 48.75, 49, 49 and a quarter, sell 2. Basically, we're trying to sell the 49 area, give or take. And don't think we'll have a chance at buying 47s today. But I think that 47.75, this high volume number right here, is probably pretty good support. And to the E-mini. Again, it's going to be the same thing we faced yesterday morning. The key to the E-mini is going to be what happens in this panel right here. Pane number 3. You can already see that the 50-lot trader, not in a big way, is on the long side. In normal times, if this was blue and we walked in the morning, that's selling power. We'll just have to see how much support, how the Fed is going to support the market. Pretty nice break in the volume at 69, pretty nice break in the volume at 60, so we might be looking at a 2060 minus market in a trading range today, 2070 plus market. So ideally, I mean, right now we've got resistance at 65, 67, 66, 67. We're going to put a question mark there. I like to sell 69s to 71s, and 74 to 76. Resistance is at 66, 67 right now. So I'm guessing we got a 70 plus, 60 minus market. 60, 60, say 61, 59 by 1. Then 55, 57 by 2. Okay, to review the news, retail sales plus 0.3, that's good for the economy. Ex-autos plus 0.4, that's good for the economy. Import prices, who cares? Export prices. With oil prices headed up, it'll make it easier for the Fed to hit their desired inflation target of 2% per year, and then business inventories at plus 0.2. Retail sales, ex-autos, is the focus. I'm guessing we got a 60 minus and a 70 plus market, with Fed support for the market obvious early, and that will be visible through pane number 3. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. See you as soon as possible.